right, good morning, peoples. Before I jump into Tesla, let me just share with you guys the headlines. I'm sure some of you saw it, and I don't want to overdo this. I mean, it was ugly, but let's see where we go. You know, a day doesn't make a trend. So let's see what the markets do. But yeah, the Nasdaq dropped over 3% to post its worst day since 2022, and a lot of us can remember 2022 had some ugly down days. So Google, Alphabet, Tesla, other tech stocks lead the sell-off. The Nasdaq posted its largest single-day percentage decline since October of 2022. And that's very typical, that September, October, kind of crash zone. But remember, crash in the market's words is a move greater than 15%. Some people, when they hear crash, think of 1929, right, which was an 80 or 90% continued move down. The markets don't, although I think it was 87 when we had a very ugly single day in October. I remember that. Uh, there was no internet. I remember my broker calling me and saying, Bruce, what do you want to do? Did you know this or that? Do you want to shift into this? And it was pretty ugly. But I had small money in the market in those days relative. Um, okay, so let's see. So Tesla had a very ugly day, as you can imagine. How ugly? Well, Tesla was down 12.33% to 215.99. So it continued. The aftermarket showed around 227. I remember looking at that because I had a winning trade in on Tesla where I had written some calls recently at a higher 260 type value and said, that's a little overvalued. I was just going to scalp them for a little bit, and I got a lot more than a little bit. So I took it right away at the opener around 225 and took my profit. Well, it continued down because I made enough, that way more than I expected to. I thought it was going to go down, but maybe 235, not 227. So when I saw 225 at the market open, I just took that naked call off the table. So, all right. But I own Tesla too, right? I added a couple of hundred more because it was pretty close to the low. I think I added 1480. So we closed at 1475, so down 10.5. So there was a situation where they didn't report some of the intraday trades. So basically, I had to go out and just look at my Thinkorswim. And some of them are easy. Like on this one, it traded between, I think, 252 and 267. I don't have it up in front of me, but I can see um, what it traded at, 255 and 279. So there's a 14-cent spread on the bid and ask. So I just went out and used 262. Right. So hopefully I'll follow up to get the real number, but there were just no posted actuals. And the same thing. So why did Tesla buy anything? Because they had buy into their fund. Naturally, when you sell off like that, some people want to take advantage, like I did, to pick up a couple extra shares. So it was 300,000 worth came in, giving them more cash, and people, in what they did was they sold the 260 synthetic and for 600 contracts, buy the call, sell the put at the 260, just continuing. And then they wrote a 230, which looks pretty good right now, right? But that is, sorry, that is out to 8-2. I put the color change, but didn't update the date. Okay. So what did they collect for that? $157,200. Okay, so that got added. Let's go out and take a look at the synthetic. So I did the same thing here since they didn't post it. I went and put, I split the level. This one was like 120 by 125. So it's pretty easy to say, okay, I'll take a dollar 22.5, right? 2.5 cents between. Perfect. And the same thing with this one. This one had a range of 43 to 45, so I took 44.3. So pretty straightforward. So that put more money in the kitty, right? We continue to pick up more money down here in that situation. We're now at 14,170. So sweet. But the bad news is one might expect you're getting killed on your synthetic, just destroyed. We were up in the 257, 260 before. We're down at 215. So we have, and I'll show you that on holding. So here's the added 8-2 call, the weekly calls, right? We should win those. It's not a whole lot of money, 157,000. But here's where we are. We're down at 1475 and 215. I imagine volatility's up. I didn't even check, but it's got to be up based on that. So how we doing our weeklies? Well, we could take them all off the table right now. We've captured 99.37%. So I imagine they will take them today. Let's look at holdings. So this is where it gets ugly. Now, this month, depends on what they do, whether they go ahead and bite the bullet and get out of these 260s and put on a new 225, 230. But if they do that, they're going to use the cash that they may pay us. So it's pretty ugly. Let's see what the bounce is. Right now, I'm looking at pre-market with an hour and 40 minutes to go before the market. I'm looking at a 213 bid. So what did I say? We closed at 250. So it's probably going to bounce. I'd have to look at the chart closely and see what kind of, probably at the 210 mark is probably, from what I recall, some support, and we may bounce. Again, I'm pretty bullish, but I'm bullish about the robots. I'm bullish about where Tesla's going to go. This earnings wasn't good. But on the other hand, I don't think it deserves the level of the sell off. When the markets sell off collectively, they're priced for perfection. And it's exactly what happened. So I think the market will get more rational. But again, could this turn into something in September and October and we go down 20%? Absolutely. I always say that's on the table, but not predicting it, because things can go positive, things can go negative. It's just a situation where that's what we live in. The higher we go, the more we're priced for perfection. But would I be radically surprised if we melted up another 15 or 20% in the NASDAQ and down? No. That's how we're at a level where 6 months out, a year out, I think we're going to be lower on these indexes. But does that not mean that in the next month or two or three that we don't rally up, even into November or December, only to then pull back? So you always have to be protective. So when you're playing the margin game, you better have some comfort. You better have some dry powder to handle that, right? I know a lot of people FOMO into these high yield and do it with margin. If you're wealthy and it's a small percent and you've got a lot of liquid money that you can just go add when needed, hey, you know what you're doing. You have the wealth factor and the experience. I'm talking about somebody young. I mentioned it a few times. When they're deploying everything they got, 10, 15, 20,000 only. And oh yeah, I saw somebody and I'm going to get that 70% yield, and they're saying, look, in 10 years I'm going to retire at 40. Well, the markets they don't work like that. They don't just put a roadmap out there and say what's happening today is going to happen for 10 years, right? They're going to throw a lot of obstacles. Again, for somebody who has capital, has wealth, has experience, not a problem. while it's good, go margin in and get it. But when it's not good, be prepared. Don't get wiped out, is what I'm saying. And only the younger and the less experienced are the ones that get wiped out. We've all been there. I've done some. I told you about that ETF that I bought when I was in my 20s, and they came up with a whole 401k. And I was like, it wasn't even internet. And I was looking and studying all this stuff and finding charts. And I was like, okay, well, it was up 100 and something percent last year. Wow, that's the one I want. I lost 47% the next year in that ETF fund by looking in the rearview mirror. I didn't know. I was young, didn't have any investing experience as far as the stock market went. I got it pretty quickly, let me tell you. All right, guys, let me get to the data. So, ugly, ugly day. I'm not worried about where Tesla is at the moment, but I want to explain to you guys what you can see. So, we went, look at this. We went from having a 60 mil loss, we got up to 23, we dropped to 39, and we went to 139, basically 40 to 139. Massive. And I'm not even counting this guy. This was under a million, and then, was 1.5 million. So I'm not even adding it because they have two synthetic. This is the one they added. Okay, given all that, if you go out, we put more cash. We put another couple of million in this guy, and we bought a cheap call and sold an expensive put. So we have a liability, right? We have a big paper loss on the 600 contracts that we added. But guess what? When I get to payout, the money is there. I'm going to switch and then come back. So we're now $1.83 in payable money. And we've won the weeklies. I mean, we're 99. I think just take those off the table today and write some more. And when you're still trending down a little bit, go ahead and write them out at, 225, whatever there's still premium out there. So let me continue down. So here's the 600 we put on plus the synthetics. And look at all these 2 cents, 1 cent, 2 cent, 2 cent. Take them off the table today, write new ones for 6 days, right? Get more time premium in there and collect some more money. You got some making up to do. So we closed at 1475, fair value is 1476. So, we're destroyed on this. But again, it's paper loss. It will become real. You have to deal with it by 8/16, but not necessarily by payday. Right? Payday is the 8th of August and declaration is the 6th. So it all depends on what the fund manager wants to do. This one, I took the mid level, right? 262. So we got a tiny bit of a loss here, right? I'm saying that we'd have to buy it back at 160 for 157. But that thing should be fine. If we're not going to run right back up, then we're going to collect that and we're going to write. I'd be writing a lot more in this neighborhood. All of this, 32,000 worth, right? It's 3350 minus the 600. Actually, I didn't even go to 21. There we go. So it's basically 33,050 contracts that you're going to be rolling. All right, guys, so let's go over and analyze the payout, and I'll explain some of it to you. So we're sitting on 122 million, but now we have 140 million loss. And technically it's 146 because we got the 65, right, that I didn't add to it. And so this kind of stuff here, the good news is we won, right? Won this weeklies. So none of the other matters. So we do have a lot of wins here. We have 122 with $146 million loss. And a short call income is losing. But I see that going forward is winning constantly. We'll have won all this, which is factored in there. We should win another 15 or so next week. So what you have a share count increase. I see them, if I had to just guess, this is probably going to get up to $2. If I'm them, I pay us 140 or 140, a dollar 40, a dollar 50, and then deal with the loss there going forward if they can work their way back over time. Now, they may be conservative. They did pay us a dollar. They may not want to do that. Why? Because they're going to pay the IV. And remember, they paid us a dollar when the price was around 16.75 or something, right? So if I come in here and I make this 14.75 and I go back and I do my yielding, which I'll do for you guys on the next session, they may drop that payment down to 80 or 90 cents and keep that reserve. I hope they don't. I mean, they really should reward us. If it's going to be weak later, give us a dollar now at least. And if that's so be it. You know, that's a lot of money on 1475, but you don't want people leaving this fund saying, oh, it's going to reverse split again. I don't believe it. I think it's going to stabilize. But again, doesn't matter what I think. The markets go into another further 20% pullback, it could. But then I think it's a buy of a lifetime, if you ask me, because I think their tech is going to be fabulous in the years ahead. Not all necessarily in the car alone. It's a lot of other things, like I always say, that they have. That robot, if they perfect that, they're beating Boston Dynamics, they're beating the Chinese. That thing is over 3 trillion market cap alone, let alone some of their storage energy prowess and some. I know there's haters out there for Tesla. I almost hate saying it. Listen, I haven't been on here. I've been doing this for 5 months on YieldMax, and you didn't hear me talking bullish on Tesla. I just said the people that bought it before that got hurt bought it at the wrong time. The chart was saying it was going to go from 400 to 100. Well, it's already gone to 100 and gone back to 271 now. If it stays in the twos and even 190, I still like it. If it got down to 120, I'd say something is wrong and it's going to take it a lot longer to finish bottoming. It might do a double bottom at 100. But that's not what I'm seeing at the moment. The markets could change that. But that's a long way. That's a 50% almost decline from where we're at, right? That'd put us at 107. And I don't see that, but let's see. Okay, guys, that's what I got for you. Not financial advice. I'm not a financial advisor. Let's hope for a good payout. They got the money in the piggy bank. Okay, so pay us. Pay up, YieldMax. All right, have a good one. Bye.